Hi guys, welcome back to another video. Today we'll be doing an analysis on Target. So the first thing I want to look at is the PE ratio, which is a 19.49, which is good because the goal is to look for companies with a PE of about 20 or less. So this is something important to look at because it shows how risky the investment will be. So looking at their dividends now, they currently offer a yield of 1.47%, which equates to about 90 cents per share, which isn't too bad. It's always nice to see a company give back to its investors. Now getting into their income statement, let's take a look at their revenue. So as of the most recent year, they're bringing in 93.56 billion, which is up about 24 billion from 5 years ago. So this is a great thing to see as it shows there's plenty of room for this company to still continue growing. Now moving into the net income, this also looks really good. They've managed to improve on this every year and are up 64% since 2016. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. So as you can see, they've been handling this so well as every year it's been decreasing. Let's take a look at their balance sheet and their current assets and current liabilities. So their current assets are looking good as they've grown to 20.76 billion, which is an increase of 73% from 5 years ago. So next, taking a look at their current liabilities, as of 2021, they're at 20.13 billion. So this is a little uncomforting to see as they barely have more current assets and current liabilities. Hopefully we can see this get improved over the next couple of years. The last and one of the most important aspects to look at in any company is the free cash flow. So as you can see, it's looking pretty solid. It's always a good first sign to see that the cash flow is positive. It's even better to see that it's growing as it currently stands at 7.88 billion from the 3.89 billion 5 years ago. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. In conclusion, Target has some really good looking financials. Some criticism I want to give is I want to see them widen the gap between their current assets and their current liabilities. Other than that, I like what I'm seeing from this company. Their income and cash flow statements are basically perfect. When considering buying this company, I would probably wait until it potentially drops back down to the $230 range. Also, two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I want to point out that I am not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube. So I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.